Hello and welcome to our video series on financial accounting. In this first module, we're going to dive into the world of financial statements. But before we can really understand how to prepare and read financial statements, which we'll cover throughout this series, we first need to get familiar with some key terminology. When I first started studying accounting, I thought it was all about numbers and complicated math formulas. But here's the truth. Accounting is actually all about language. It's often called the language of business. And if you want to succeed in your accounting class and beyond, you absolutely need to master a handful of core words and concepts. In this video, we're going to focus on 6 essential terms. It might sound simple, but trust me, these 6 words form the foundation of everything we'll learn. So take your time with them, make sure you truly understand them, and think about how they fit into the bigger picture of accounting. Here they are. Assets, liabilities, shareholders' equity, revenues, expenses, dividends. Let's start with assets. When I introduce this topic to students, I like to ask, what are some typical assets you think a college student might have? The answers I usually get include things like a laptop, textbooks, maybe a car, or even a bicycle. Some students get creative and mention things like their education or their skills. And while those are valuable, they don't show up on financial statements for reasons we'll discuss. So what exactly is an asset? The simple way to think of it is anything of value that a company or person owns or controls. The technical definition is a bit more complex. It's something owned or controlled as a result of a past event that will provide future economic benefits. But for now, something valuable that can be measured is a great way to think about it. Some examples of assets you'll see on a company's balance sheet include cash, the simplest asset; accounts receivable, money owed to the company; inventory, products the company plans to sell; property, plant, and equipment, like buildings, land, and machinery; investments, for example, when a company buys shares in another company. Moving on to liabilities. If the keyword for assets is value, then for liabilities think obligation. A liability is something that a company owes, something they're going to have to pay back in the future. As a student, think about your student loans or a credit card bill. Those are liabilities. For companies, common liabilities include accounts payable, bills they need to pay soon; notes payable, formal loans or promissory notes; wages payable, salaries owed to employees. Now, let's talk about shareholders' equity. This one often confuses students because it's less intuitive. The easiest way to understand it is to think of it as the owner's share of the company after all debts have been paid. Imagine you own a house worth $300,000, but you have a mortgage of $200,000. If you sell the house, pay off the mortgage, you're left with $100,000. That's your equity. For a company, shareholders' equity is what's left for the owners after selling all the assets and paying off all liabilities. It's made up of 2 main components: share capital, the money shareholders have invested; retained earnings, the profits the company has kept rather than paid out as dividends. And that brings us to revenues, expenses, and dividends. These 3 are key to understanding how a company operates. Revenues are what a business earns by doing what it does best, selling products or services. Whether it's tuition for a university or sales revenue for a store, think of revenue as income earned. Expenses are the costs of running the business. These include salaries, utilities, rent, and all the other costs needed to keep operations going. Finally, dividends are the portion of profits that a company decides to pay out to its shareholders. If the business has earned more than it has spent and is profitable, it can either reinvest that money, adding to retained earnings, or distribute it to shareholders in the form of dividends. To sum up, these 6 terms, assets, liabilities, shareholders' equity, revenues, expenses, and dividends, are the building blocks of accounting. Master these concepts now, and you'll be ready to tackle the rest of this course with confidence.